We are talking ESG ETFs today, which have had a hard time gaining traction. Eric Balchunas of Bloomberg Intelligence is here. So let's refresh people's memory. First of all, ESG, it's essentially socially conscious investing is what we're talking about. It stands for environmental, social, and governance, right?
Yes, and you hear a lot about it. There's no loss of hype here.
Right.
The surveys say people want it, but the assets just won't follow. ESG ETFs have $6 billion. That's only 0.2% of all ETF assets. So it's riddled people, and I've really tried to think about what's wrong. One thing we haven't had yet is a dirt cheap offering, and now we have it.
From Vanguard,
From
of course.
Vanguard. So you got the brand name, the dirt cheapness. This new ESG ETF from them is going to charge 12 basis points. That is enough to sort of get the juices flowing for advisors who really like cheap products. You can see they're the ones that are cheap in the ESG tend to have taken in the most flows. So there's some... it points to the fact this should be a big hit. If it isn't, then we can kind of look at ESG as maybe not having a huge future. Wow. This is a great test case for people wondering what this ETF invests in. It screens out alcohol, tobacco, adult entertainment, human rights violators, diversity issues. It's about a huge laundry list, but at the end of the day, you're only going to have 300 stocks that you don't have in the FTSE All USA. Some big names excluded in the top 10 include Exxon and Berkshire Hathaway. But all in all, like most ESG, you're going to be a little overweight tech and a little underweight energy and industrials, and that's par for the course.